Good afternoon. I'm Peter Lopresti, Realtor with Exit Strategy Realty and proud member of the Stoic team. Today I'm happy to interview another member of the Stoic team, Peter Georgitis, Senior Mortgage Advisor for Preferred Rate. Today we're specifically going to talk a little bit about mortgages, specifically FHA mortgages and recent changes that are going to be beneficial to most of our clients. So Peter, if you could perhaps just do a quick introduction to what FHA mortgages are, kind of a little bit of their history, and then we can talk about the changes as well.
Great. Thank you, Peter. Hi, this is Peter Georgitis from Preferred Rate. Great question. So FHA is a program that we have that deals with consumers who have little bruised credit or, not as qualified as conventional, but also they have benefits for people who want multiple unit properties, 2 to 4 units. The biggest attraction of FHA is their down payment. With that being said, to fund the program, they have something called MIP, which is called Mortgage Insurance Premium, which is, again, MIP. This helps fund the FHA program. And the governing body of FHA is HUD, which doesn't use any federal funds to fund the program. So with the MIP, good news, starting now that you are able to reduce the MIP, they've reduced the MIP by 35%, which is substantial. As the loan amounts are rising, sale prices are going up, this helps out the consumer save a little bit on their payment, which helps them qualify better.
Thank you so much for that introduction, Peter. So just to recap a bit, it seems like FHA are ideal for first-time home buyers, people who would like to have a lower down payment on their mortgage, and as well people who, let's say younger people who perhaps have student loans and so they're worried about having a certain debt-to-income ratios. FHA has a little more flexibility in that arena as well, correct?
Correct. Again, we're comparing it to the other programs, VA program or a conventional program, and when you compare them, and FHA really checks the box as things that you mentioned. Low down payment. First-time home buyers are traditionally don't have a lot of money saved. People maybe, got a new job and they want to purchase something like a condo or a single-family home or 2 to 4 unit, so they can get some income revenue generated to them. So yes, so the down payment is a benefit, and also lower scores are a benefit. If you have a low score, you do not get that kind of penalty as you would as a conventional loan, because your scores don't really cause you to have a higher rate. And the MIP, of course, is needed to protect the investor in case you default.
Understood. Of course, it's always nice to talk about lower payments for our clients. Everything's kind of nebulous, just up in the air.
Yes.
I always love to have firm figures. So just this morning, we had a meeting with a client of ours who was looking at a multi-unit property, and I think the 2-unit building was a little over $300,000. And if I recall correctly, you did the math just to kind of show how much they would be able to save every single month with the new changes that FHA implemented.
And in our example, thanks for bringing that up, Peter, $102, which is, again, 35% savings. That 102 can maybe push them up, it depends on the sale price, another $15,000 to $20,000 in purchase price. So it is a substantial savings.
Oh yeah, that's impressive. I mean, this decrease in the mortgage insurance premium, like you said, it gives buyers a little more cap room. So if you were someone who perhaps were limited in what your budget was before, please reach back out to us. We'll be more than happy to rerun your pre-approval to be able to get you an updated pre-approval that reflects this new change. And for most people, everyone really, it would increase their purchasing power, right? Not to have to pay for this.
Correct.
Thank you. Yeah, and again, this scales as well, right? So this was a property that was $300,000, and so he was able to save over $100 a month, which we're talking about $1,200 a year. When we're talking about over a 30-year loan, we're talking about over $30,000. I mean, it's a significant savings for our clients. Additionally, though, if let's say instead of purchasing a home at 300,000, they're purchasing a home at 600,000, would the savings increase?
Of course, yes.
Okay.
Yes, it would increase substantially based on the number on your loan amount. Correct. You are correct.
Amazing, yeah, and it's linear as well. So let's say, for example, someone who is saving $100 at 300,000 would be able to save $200 a month on a $600,000 mortgage.
Yeah, proportionate, and it would probably be in a range of 2 to 215 that you would be saving.
Amazing, perfect. Well, I wanted to recap kind of this. We wanted to always let all of our clients know the recent changes, and of course there's always tons of changes in real estate. So again, this is speaking specifically about FHA mortgages, which are great options for people who want to buy multi-unit buildings, as well as for first-time home buyers. And again, as we discussed, they have very low down payments, 3.5%, as low as 3.5%. And of course, this new great piece of news that we had is that the mortgage insurance premium is going to be 35% less than it had been just a couple weeks ago. So it's amazing to have this. And finally, really the last part about the FHA program is that it provides a little extra buffer space for people who are carrying significant debt like student loans, or had other types of financial hardship as well. So if that sounds like you, this is a great time to reach out to us. So please visit us at thestoicteam.com. Feel free to go ahead and fill out a contact us form, and we'll be reaching out to you within 24 hours.
Thank you, Peter.
Thank you so much for your time. Hope everyone has a great day.